How does the decline of the US dollar affect your business? How does it affect your investing? How does it affect everything we do on a day-to-day basis? Today on the Wealthability Show, we're going to discuss just that, the decline of the dollar, both the decline of the value of the dollar, but also the decline of the dollar in its place in the world market. And we have a singular expert here with us today, Ken Rogoff, who wrote the book, Our Dollar, Your Problem. And Ken, it is such a delight having somebody of your stature on the Wealthability Show.
Oh, it's great to be on a great podcast like this, Tom. So thank you for having me.
Yeah, thank you. If you would, Ken, not everybody in our audience knows you and knows who you are. Would you give us a little of your background? It's pretty impressive.
Well, I'm a professor at Harvard University, which for the moment still exists. And I've been here for a long time, but I've had other positions in my career. I've taught at other universities, but I started out as a very junior economist at the Federal Reserve in Washington. And much later in my career, I took leave and was chief economist at the IMF. My most famous academic paper is I wrote the first paper more than 40 years ago on why it was a good idea to have an independent central bank that focused on inflation, which now sounds normal, but there was no one back then. In fact, only a couple countries, the US and Germany, had independent central banks, and that became very influential. And I've done a lot of other things, but I will mention I work on exchange rates. That's been a big topic. And before this recent book, Our Dollar, Your Problem, I had a book in 2009 called This Time is Different with Carmen Reinhardt on the history of crises and financial crises over 800 years. And it also had a lot of data and stuff at the end. It was a very data-driven book. It improbably reached fourth on Amazon of all
Wow.
books behind the three Girl with the Dragon tattoo novels. We did not have sex and violence in that edition, but maybe we'll come out with another one
There
later.
you go. There you go. That's awesome. So would you mind, I always like to start with really the basics, make sure everybody's on the same page. Would you explain what it means that the dollar is the world's reserve currency?
Yeah, I mean, it's a kind of vague phrase. So literally what it means is that most central banks in the world, most governments have quite a store of cash. It's literally cash. It's treasury bills. And they don't just have it to protect their exchange rate. They have it to protect their banking system, whatever kind of crisis happens. And you can say, well, why doesn't, say, India just hold the rupee? Like, isn't that good enough? Well, no, not if India is having a crisis of some problem. They want something everyone can use. And so central banks today hold trillions of dollars. In fact, foreign demand for our currency constitutes, it ranges from a quarter to a third of our massive debt. So that's a literal sense in which the reserve currency, it's in their reserves. But there's a much more important sense in which the dollar's the lingua franca of global markets. It's like English. So, as I think probably a lot of your listeners know, a lot of financial assets are denominated in dollars. When Australia wants to borrow from, say, Singapore doesn't want Australian dollars. I mean, they just don't want to bother. They want the debt to be in US dollars. When Ethiopia trades with, I don't know, Sri Lanka, they both have their own currencies, but they do everything in dollars. I mean, there are a few countries that do things in euro, but it's usually in dollars. Oil is priced in dollars. Everything's priced in dollars. It's just the universal currency. And it is an incredible advantage. I mean, I've traveled a lot, and it's wonderful that English is the universal language.
Right.
By no means does everybody speak English, and by no means does everybody accept dollars. but you have a better chance if you're speaking English or using dollars. So that's the sense. And I'll just finally say there's a long history of who the big dog was in the currency world. Uh, Spain in the
right?
1500s. Believe it or not, the Netherlands was in the 1600s. I mean, that's hard to get your head wrapped around because it's a very small country, but very clever people, and they did. And then for really more than a century, the pound was the dominant currency. The sun never set on the British Empire. But then, particularly after World War II, it's been the dollar. But the dollar has just grown. So after World War II, we had this financial system that put the dollar at the center. Literally, everyone agreed the dollar is top dog, and we will peg our currencies to the dollar. But everyone was not everyone. Everyone was Europe, Japan, Canada, a couple other countries. There was the whole Soviet bloc, the Chinese, and all these countries like India, parts of Latin America that really hadn't entered the global economy. And as they did over the last 40 years, the dollar colonized all of them and reached a peak that even the British pound, the Spanish pieces of eight never had. And that's the really important sense in which the dollar is the reserve currency.
Ken, you used a really interesting term there. You used the term colonized, that the dollar colonized. I love that term because financially that's the case. And let's go back to, okay, so two countries, they pegged their transaction in dollars. They've effectively created dollars, right? So this is the whole idea behind when people talk about the euro dollar. These are dollars that aren't created by the Federal Reserve. These are dollars that are being created because your financial instruments is in terms of dollars, right?
So that's right. But what gives us just such incredible power in the world uh, in controlling the flow of global finances is that in a crisis, only our Federal Reserve can print dollars. So if you've been out there, you're in the UK, you're in China, you're in somewhere, and you've been creating dollars, and suddenly there's a liquidity squeeze,
Mm.
and people are having trouble finding these dollars that you need to be able to do that. And for that reason, and this is a little hard to get your head wrapped around, and forgive me, but the whole global financial system flows through the United States. Because if Europe tried to set up its own clearing center to clear dollar checks, to clear dollar transactions, it's very limited because in a crisis, they get blown out. And so that has given us this control over the global financial system, also our military power. And that is what lets us put on sanctions. That's what gives us information. So on top of that, we pay a lower interest rate because everyone wants dollars. We have all these other privileges. It has been a big, I don't know, you want to call it perk of American power, source of American power. Very, very important to our business model in the United States.
Yeah. Now you've been talking recently about the decline of the influence of the dollar. Can you kind of give us some idea of why is that happening? I mean, we saw it happen. It's happened with every empire, right? It happened with Spain. It happened with the Netherlands. It's happened with the pound. It appears to be happening with the dollar. Why is it happening, and what's the consequence of that?
Well, part of the reason it's happening is even though from an efficiency point of view, of course, everyone should speak English or everyone should use the dollar. We understand why everyone doesn't speak English. And the reason why there's some resistance to having everything go through the dollar is it gives us so much power.
Right.
The Chinese obviously hate it and they've gotten very big. They have been a key to how the dollar has grown because they, for the longest time, really pegged their currency to the dollar, which effectively dollarized all of Asia and even Latin America and Africa. You had the US, you had China, the two big countries, they were both dollars. So what are you going to do if you're in Africa or Latin America? But over time, first of all, they're a big economy and they get bigger and bigger. They have different business cycles. They're in my opinion, in a recession now for quite a while,
Right.
or at least what I would call a recession. In China, we're not. We might be, we can come to that. We might be, but we're not. And they don't need the same interest rates as us. So that reason's been there. But I think what's really given them a kick in the butt to move away from the dollar is they see how we use sanctions. They see what we did to Russia. We prevented them from trading in some ways,
Well,
not
we
in enough.
weaponized the dollar against Russia.
We've weaponized against Russia. We actually have sanctions against 20 countries, Iran, North Korea, but a whole bunch of countries. And we took away the Russian central bank's money.
Right.
They had 300 to 350 billion dollars. We say we didn't default, but we said, well, we're not defaulting. It's your money. We're not taking it away, but you can't have it. And of course, you know, it's a default. I mean, it's just we're getting into technicalities. China has $2 trillion. I mean, officially only 1 trillion, but my book argues 2 trillion. They hold it indirectly in other ways.
Sure.
And you think they didn't see this? You think they don't realize that when they blockade Taiwan, which a lot of people, experts that I talk to, thinks a near certainty that there are certainly 80, 90% chance they're going to do soonish. You think they're not worried about that? They are. You think they're not worried about our sanctions, so they're moving. And believe it or not, a lot of our friends hate it too. The Europeans don't like that we see so much more about them than they see about us because we're seeing the transactions.
Well, and effectively, it seems like it almost seems like we've overspent our power. And it seems like that's what President Trump is doing with the tariffs. He is actually using that again as a weapon, but this time an economic weapon.
Yeah, I mean, we overuse the sanctions. I mean, I have to say, my book starts out talking Our Dollar, Your Problem, starting with talking about living in the Soviet bloc. When I was a teenager, I was a professional chess player. They were much better at chess. I mean, the United States had the best player, Bobby Fischer, but they had a lot more tournaments, and I was living in the Soviet bloc, and just seeing how influential the dollar was even there, but they were broken away from us. Anyway, I was living as a teenager in the Soviet bloc, and Nixon got elected. I'm not young, and I was a teenager, about to be of draft age, and I'm thinking, I don't want to go back to the United States. I mean, this guy's a warmonger. Okay, I don't want to get into the politics, but you're a teenager, you're about to get drafted.
Right.
I had friends who got drafted a little older than me who ruined their lives. They went to Vietnam. I'm sure you have relatives or friends who did. None of my friends died, but two really close friends became heroin addicts and they never recovered. They were just their lives were ruined. So it was in many ways, we were as uncomfortable about things Nixon was doing as people today are about what Trump is doing. But certainly the Trump tariffs are. I teach at Harvard. I'm guilty, but I would categorize myself as among the 3% that identify as conservative, which means centrist in my opinion.
Sure.
But I don't think everything Trump does is wrong. But the tariffs is just the dumbest policy ever. Not just putting on tariffs. I could live with that. You want to put on a 5% or a 10% tariff. It's a tax. I don't like taxes. You can cut a tax somewhere else. But this whole idea of let's make a deal, let's bludgeon them over the head, let's take it to 140%, let's take it down, let's see where our, it's been very undermining the dollar. And I'm glad you used the word empire because Rome, of course, famously rotted at the center. And if I ask where the vulnerabilities, and I'm not going to blame it on Trump, I think it's much deeper in our
Sure.
in our political system. Our debt situation's unsustainable. It's not Biden's fault. It's not Trump's fault. It's us. It's us, the voters. We'll throw out anyone we haven't become convinced. And so that is also a vulnerability. Everyone else sees it. They see it, believe me, and they're diversifying because of it.
Yeah. So the Trump doctrine actually seems to be deal making. If you look at the new tax bill, it's deal making. There's so my wife is also a CPA, and we were talking yesterday. I'm going, wouldn't it be nice to actually sit down with somebody and talk about what actually good tax policy would be, as opposed to what deals should we make here, right? I mean, there are parts of this bill that are, I think, really good tax policy. I think
Agree. I agree.
expensing
Yeah.
equipment, research and development expensing, those are really good tax policy. And of all things that should be made permanent, should be those two things. Of course, so they're temporary, right? But they should be made permanent. And I think, lower tax rates, generally speaking, good
Hmm.
tax
Hmm.
policy. But giving special deductions to certain groups, like people who work overtime or people who get tips, not a big fan of that.
It's mhm.
It's a political buy your vote type of a thing to me.
Exactly.
It's let's make a deal. And the salt deduction, the dumbest idea ever is that we ever had it in the first place. Okay.
Agree.
There should be a zero state and local tax deduction. Zero, not 10, not 20, not 40, not 50, zero. But those are policy decisions. So it seems to be a let's make a deal. So if the dollar, okay, so we seem to be overspending our influence. So we got this huge bank account. Think about it this way: we got this huge bank account, and we've kind of been. I think Biden overdid it with the sanctions. Now Trump's talking about more sanctions on Russia. Can't possibly work. And trying to flex that muscle. It seems like we're in danger, or we could be in danger of like losing that power, just the way Great Britain lost that power. Do you think that's coming? And if so, what's the consequence to the average business owner?
So the dollar's influence was eroding before Trump. The problem of our unsustainable fiscal policy was coming before Trump. He may
For sure.
lash out at the Federal Reserve, which is, I think, I mentioned, I'm talking my book because not my recent book, but I wrote the first paper on central bank independence. Of course, I think it's a great idea. But the Democrats were lashing out at it too. There are a lot of ideas among progressives to take it away. He didn't invent everything, but there are these problems at our core that are undermining our long run strength of the dollar. We're not going to be suddenly have your clients paying in renminbi and probably not even in euro. But I mentioned we colonized everywhere. That's part of why our interest rates are so low. So I think that's going to get less. And so one effect is interest rates will go up. But I think where people will really see it, where it will really be painful if this keeps going, will be when we have another crisis. And we will. Uh, I don't know what it'll be, a pandemic, a cyber crisis. I just have no idea. But I think we will. I mean, we see, we have them frequently. And if we last 5 more years without one, I think it will be very good luck
Well,
indeed. And when it happens, we want to borrow a lot. We borrow more than anybody else. I know my progressive friends think we need to borrow 3 times as much, but we already borrow twice as much
right.
as anybody else. Everybody looks at us. Oh, I can't believe you're borrowing so much. We're able to do it because a quarter, a third of our debt
Right.
is held by foreigners. We're able to borrow that much more. But we're not able to borrow 3 times as much as everybody. There are limits, and our debt's gotten very high. Uh, we feel it because interest rates have gone up, and we have to pay more in interest payments. And in my opinion, interest rates will probably continue to rise at the long end. I don't think we're going back to these really low interest rates for a lot of reasons. So when we get that shock and we go out there and try to do the same thing, the bond markets are going to react a lot faster as we're doing it. And it's going to you'll feel it. You'll feel like you're in a normal country. And for Americans, that'll be a big disappointment. So we'll certainly feel that. And I mentioned the national security, which is more subtle, so I don't want to get into that, but it'll affect your taxes, it'll affect your national security. So there are a lot of ways you'll feel it, but the most direct ways in your loans, your mortgages, where everyone pays between 0.5% and 1% less than they would if the dollar wasn't on top, is so high on top.
So, so you're not suggesting that, I think you mentioned this, that you're not suggesting that there's going to be some other reserve currency. Do you think that there will just be less, it will be more distributed?
Be
So,
more,
or will people gravitate to a Bitcoin, for example, which
mhm.
certainly has seen enormous price increases in the last year, more than gold. What do you think the practical consequences are from a pricing standpoint?
Well, I think the dollar is very high right now. And you very carefully, when you introduced it, said there's the value of the dollar and there's the use of the dollar. They're both very high. The use has been coming down, but the value is very high. And I have a certain amount of conviction, I talk about it in the book, that when you hit these peaks, it's very hard to predict exchange rates, but when they're way out of line in a purchasing power parity sense, it's probably going to come down. So I think that's something, it's an argument for diversification, for example. I think, I know this sounds crazy, but think European stocks will outperform US stocks in dollars. And it's partly just reversion to mean they've fallen so far behind. Um, so, and I mentioned we'll probably face ever higher interest rates.
Of course, there's an argument that the
Oh,
lower,
I'm sorry, I didn't answer about Bitcoin. So I'm sorry. Bitcoin is a competitor for the dollar in the underground economy. I mean, Trump's trying to bring it into the legal economy, and I think that'll get undone. That's going to lead to a crisis. And that's part of what's bidding up the price because it's not just Bitcoin, but the whole infrastructure around Bitcoin. And he just goes deregulated, which, by the way, is the opposite of what he said in 2021, but I won't go there. And Bitcoin competes in the underground economy for you're a CPA, correct?
yes.
So you're not auditing people in the underground economy and people doing illegal activity and arms dealing and human trafficking and drugs. But Bitcoin's used in that world. The dollar is too. But cryptocurrencies have been rising and rising in that world. Russia and China are probably using Tether, it's a stable coin, to do a lot of their trade to get around sanctions. So, and that gives it fundamental value. I take issue in the book with all these people like Warren Buffett and Jamie Dimon and Nouriel Roubini and Paul Krugman, many who say Bitcoin's useless. Its value is nothing. Well, if everybody's obeying every law and we control everything, that's true, but we don't. And so I think cryptocurrencies have a market there. There's a question about how we should be regulating it. But at least for the next 4 years, we're not going to be. So probably going to continue to do well.
Yeah, it's an interesting question to me because the value of anything that is fiat is based on confidence. So the value of the dollar is based on confidence. I mean, there's no there there. It's not like it's backed by something.
I'm going to push back on that a little bit.
But Bitcoin, same thing. I mean, gold, same thing. Gold
I,
has no practical uses, but so the value is somewhat, while it's a real tangible asset, the value is based on, well, how does it compare to other assets? That's where the value comes from.
I, I'm I got to push back on that a little bit. So
Yeah, please.
there's a famous couple chapters in Yuval Noah Harari's famous book *Sapiens* that are his most
Yes,
famous
right.
chapters, saying kind of what you said, and it's true, but it's not true. The government has a lot of levers to make you use its currency. It can require you pay taxes in its currency. It can pay its suppliers. It can pay its employees. It can make banks honor it. That creates network effects that give just an enormous advantage to its currency. It can go farther than that, but it probably typically doesn't need to. And so, there are advantages that the fiat currency, and to say that it doesn't do anything, well, it's useful. We need a medium of exchange. But the reason the government's medium of exchange tends to win over history is because it controls things. Like the first paper currency was Kublai Khan's. He was the grandson of Genghis Khan. Marco Polo wrote about this. And okay, he had a paper currency. Marco Polo's maybe most famous chapter is about alchemy. He's somehow turning tree bark into gold. But the emperor would execute you if you didn't accept it in payment. It was punishable by death. So I mean, I don't think it's right
Well, there's
on the
certainly
other
regulatory
side of the
power for
equation.
sure. There's power because of the regulatory. I mean, in fact, I've said for a long time that the real power of the dollar is that the government does require you to pay your taxes. And
Absolutely. Oh,
it
you're
does. I don't think it's
100%
a
right.
coincidence that
100%.
the 16th Amendment and the Federal Reserve came in to play the same year.
100%. 100%. I completely agree with what you're saying. But that also gives it network effects
Right.
once everyone's having to use it.
Well, and the
So
network effect is that
that
much bigger because we've colonized the world with
And
it,
they're,
right?
and they're that much bigger because we've colonized the world. And what's unwinding about the dollar is some of the colonies are breaking free. The one that really matters because it's so big in the global economy is Asia. And as China breaks free, it sucks part of Asia with it. They're about half the dollar block. And so that's a big deal. And a lot of people don't realize that's been going on.
One of the things you mentioned is previously was that oil is sold in dollars, and yet there's there's been some pushback on that by China and Russia, and there's question: will Saudi Arabia continue to use the dollar? That seems like that's a big deal since all of our wars in the last 100 years have revolved around oil. Um, what do you think about that? Do you think that we will lose that? Are we in danger of that? Because that seems like a big deal.
You're absolutely right. It is a big deal. And of course, the part of the world that's most quote unquote free of the dollar is probably Europe. Europe has the single currency, the euro. Well, if you go back to the 1960s, before our fixed exchange rate system broke up in the early 70s, they were already thinking about going to something different. They were starting to price in the German Deutschmark. They were starting to have loans in the German Deutschmark. They were laying the groundwork for what, eventually happened. And China's doing the same thing. It's pricing, it's creating very innovative financial systems and financial structures to make payments. They're laying the groundwork to be able to have more freedom from the dollar. And that's been going on for quite a while. And again, accelerated by the sanctions against Russia, where they see the handwriting on the wall.
Yeah, so it seems like the dollar hegemony is seeming to be splintered now, and so now you're going to have more transactions done in the renminbi, the yuan. You're going to have more transactions done in the euro, and you're going to have more transactions done in Bitcoin. I mean, as even if Bitcoin were regulated to the extent that there was reporting requirements, that just means there's basically tax reporting requirements. Doesn't mean it can't be used, and it has the advantage of not being controlled in the size of the or
Hmm.
the
Hmm.
amount of Bitcoin that we have, with the dollar, where we
Hmm.
we can print dollars, we can't print Bitcoin.
But Bitcoin and cryptocurrencies in general, they're the underground economy. But that's big. My book gives estimates of 20% of global
Worldwide.
GDP worldwide. It's pretty big in the advanced countries, actually. It's 15%, think, and in places like Italy, 30%. And Bitcoin can be used in those. And so that's a $25 trillion economy. So that gives it real value. I don't think Bitcoin's going to conquer the major
You
countries
don't think it'll
because
go
they have so
mainstream,
much
in other
incentive.
words?
they have so much incentive to restrict it if it starts replacing the dollar. It creates a lot of problems.
Well, we've already seen this in China, right? They already restrict it, and so it does make sense. They don't really it's not in their interest for it to go completely mainstream, which I think
Mhm.
is the point here. So, what are some things that you think that business owners can do, and what should we as business owners be looking at in order to kind of prepare for this, because it's clearly declining. Clearly, I mean, not just the exchange rate of the dollar, which means hurry up and take that European vacation because that's going to cost more. But what can we do from a business standpoint? Do you think, or do we need to do to counterbalance that change in the use of the dollar?
Well, you're much more expert than I am, but I would say things like it's going to be a more volatile period. It's going to be more like the 70s than it was like the 2010s. That's what we're facing. And that's tough when things are more volatile, but I would just get used to it. It's going to be part of things. I say that I would not count on interest rates collapsing back to zero. That's a controversy. That's my opinion, but I have quite a bit of conviction that longer term interest rates right now, the 10-year rates around, as we speak this moment, the 10-year rates around 4.5 and the 30-year rates around 5. I expect those to drift up another percent in the next couple of years because there's debts pouring up. There's militarization going on all over the world. AI is sucking up a lot of investment. The fracturing of trade. So if you're closing yourself off to trade, that's what Trump wants to do. He wants to have less, uh, better trade balance. That means less money coming into the country to pay
Right.
for that trade. That's been keeping our interest rates down. So there are a number of things pushing up interest rates, and I mean that's probably almost no one listening wants to hear that, and I'm sorry, but plan for it. Like if you're thinking of taking a 2-year loan or a 10-year loan, I would take the 10-year loan right now. I would. Maybe I'm wrong. I understand they're very volatile. Many people with great expertise on this, but I mean I expect to see this upward drift, and I would think about protecting yourself against how to protect yourself against inflation. I expect that all this volatility, this budget unsustainability, which is magnified by the decline in the dollar, which raises our interest rates, which makes it even harder to balance our budget. I think it's not going to end well. I think we're going to end up with a burst of inflation, not because Trump is not managing things well, not because of Biden or whoever's next, because the American people are
Yeah.
not prepared to accept anything until we have a crisis. No, any politician who tries to do others. For example, we haven't really raised the retirement age compared to
Right.
other countries. We're France. We think we're France. And I don't know who France thinks they are. They're in a lot of trouble. Every other country, even Denmark, the
Yeah. I mean, look at
progressives,
that. Denmark went to 70.
Denmark went to 70.
Why,
I
why,
mean,
why don't we, why don't we peg our retirement to our life expectancy? I mean, that makes no sense to me. Why we would somehow get to have more life expectancy and the same amount of money for longer periods of time, and without higher birth rates. I mean, it's a Ponzi scheme to begin with, by definition,
yep.
and so that does seem odd to me as well. But it sounds to me like what I'm hearing you say is we've got to really reprice our expectations. We even may need to reprice our assets. We may need to, because if people are thinking asset interest rates are coming down, because we always need our earnings rate to be higher than our interest rate.
Hmm.
Okay. If
Hmm.
our earnings rate is lower than our interest rate, we're in trouble. We cannot sustain that for very long. So it makes sense to me what you're saying, because if your inflation rate is 3%, your interest rate has to be higher than your inflation rate
Hmm.
by
Hmm.
definition.
Hmm.
And then your earnings rate needs to be higher than your interest rate. So it's this repricing. We have to think, okay, what are we going to do so that we can reprice, whether it's our goods, whether it's our real estate, whether it's our business assets, whatever that is. But we have to keep this whole pricing mechanism in mind. And and I think you're right. I think the politics of it are such that, hey, people aren't going to accept it. I mean, why aren't we doing something like you said about Social Security? Why aren't we dealing with this when we're headed towards a 21% cut in a very short period of time? Why not deal with that? Why are we waiting until the crisis? And so I think that's a really important thing. And I think your book, Our Dollar, Your Problem by Ken Rogoff, I think that is such understanding how this is working. It's going to allow us to kind of that macro thought process you're talking about, then we can apply it into our micro type of a business, it sounds like to me.
Well, you say it not surprisingly much better than I could. I should mention, of course, there's AI and who knows, but I watch previous generations of inventions. They take a long time to kick in. I know they're all the enthusiasts, but you could have heard that about the steam engine and the railroads and container ships. And it's all airplanes. It's all true, but it takes longer than you think. And I mentioned I was a professional chess player. I followed AI my whole life, and it's a miracle what it's done, but it just takes longer than you think in order to come to
Well, there's
fruition.
actually construction projects that have to happen. Here's the thing about AI, it takes power, right?
Yeah, very true.
And you might have seen that Trump has like doubled down on nuclear. Actually, Biden did. He started it with the
And
2022
good for them. Good
Tax
for
Act.
them.
Yeah, I think so but those projects take years to build.
They take
But
like
to your
15
point,
years. Yeah,
the
yeah.
infrastructure, while the technology itself may multiply rapidly, the infrastructure to
That's
support it can't move as fast.
no, that's very well put. I mean, I didn't think of saying it quite that clearly, but you're absolutely right. If nothing else, the energy's just not there to do what we want to do. And that is not something we're going to be able to solve quickly. And I do think nuclear has to be a big piece of it. And I maybe my classes get boycotted for saying that, but I don't see another solution. And I can't imagine how long that's going to take. And so therefore that has to be a constraint on how fast AI can grow.
Well, thank you, Ken. The book again is Our Dollar, Your Problem. Ken, for more information about what you're doing, where can people find you?
Well, I have a Substack, which is just developing. I have a Harvard webpage, which gives my writings. I write on Project Syndicate once a month. That's available. And, have op-eds in newspapers. You can just Google my name and a lot of stuff comes up.
Well, that's great, Ken. It's been absolutely delightful to learn from you today and to talk about what, I think the average business owner, we're so caught up in our day-to-day business that we forget to sometimes step back and take a look at the bigger picture and what happens with the dollar, because it does affect things. Now, on the one hand, it may make our goods cheaper. So if we're selling overseas, it may make it easier for us to sell overseas. If we import, it's going to make it more expensive. Certainly the average consumer is going to see price increases as a result of this. That I don't see any option there. And like you say, interest rates, I think that's a really fascinating thought, because that's something we deal with on a day-to-day basis in business.
Just to support what you're saying, this is a moment where you don't normally think about these things. Macroeconomic issues don't affect your business. You don't really care. This is a turning point. This is a big one of things happening where I think most people probably should inform themselves, and they'll regret if they didn't. It's, you may be always hearing that, but this is a moment with a lot of change on the horizon.
I love that. Ken Rogoff, again, check him out. Check out all of his works, his previous books as well. And remember, when we do get this kind of an understanding, we're always going to make way more money and pay way less tax. We'll see you next time on the Wealthability Show.
This podcast is a presentation of Rich Dad Media Network.